I'm Al Berkeley. Our guest today is Campbell Pryde. Campbell is the CEO of XBRL US. XBRL stands for eXtensible Business Reporting Language, and XBRL US is a nonprofit that was set up to be the standard setter for the automation of the SEC's database on public company information. Campbell, this is a sea change in what's available to investors. Now, what does this mean to an investor out in our audience?
So, one of the reasons that this was even done was to make this information available to investors. And one of the things that a small investor is going to be struggling with is, how do I understand what all these companies are doing? US GAAP, as we all know, is very complicated. There's a lot of rules to understand, and the point behind XBRL was to make this information automatable. So a service could write tools which allow people to basically search this information. So today, an individual investor is going to have the capability to have the same tools that large investment banks have, but tools which would be better than what investment banks have today.
So let's drill into that, because what I hear you saying is that the ordinary citizen, with some tools that are available either commercially or in open source,
correct,
can go to this database and pull the data directly from the government.
That is correct, and the way that we've done it is so that all the information is available. So not only high-level information like EPS or net income, but you can get right down to the details about pensions, unremitted foreign tax earnings, taxes. And the other advantage is it's not only these individual companies, you've got lots of options of what you can do with it. You can do sector analysis, you can do aggregations, you can start to look at this information in a much more holistic way.
Talk a little bit about what having this data in an electronic form means for understanding how the whole economy is put together.
Right. So one of the points of XBRL is to make this data standardized and to make it comparable. So what that allows us to do is to be able to take all the financial data that's being reported today and to be able to aggregate that and start to get an aggregate view of what the economy looks like. So for example, in 2012, we can look at what's the total assets of the economy, or the public companies reporting. So today we have about in the XBRL filings, about $49 trillion of assets has been reported, and that gives. Then we can also break that down by sector. And if you look at the graph that's on the screen, you'll see there's a graph of total assets, and you can see the huge part of that graph is comprised of the financial services sector, and that represents a massive component. And then you can drill down into that information, because then you might want to say, I want to see what that information is. So you have Fannie and Freddie Mac, for example. They represent $6 trillion of the $49 trillion in assets. That's 12% of the aggregate economy. So we have Congress wanting what they're going to do with Fannie Mae and Freddie Mac. This is a huge problem, and when you see this information graphically, you can start to get a much better view of why this is an issue for the government.
Mm-hmm. So let's drill down a little bit and talk about Freddie Mac and Fannie Mae.
So here you can see this is the aggregate assets for Freddie Mac. This is the nice thing about this data is you can start to do time series analysis over it. Obviously, when these companies went into conservatorship, the government had required that they start to reduce the assets that they have. You can see with Freddie Mac it started to be a small reduction, but nowhere near to the extent that they would want if they were going to phase these companies out, which just represents the problems that the government's going to have in dealing with these two companies. The next page, you can see Fannie Mae. You can see a big jump there. That's where they've taken a lot of the assets they had that were off balance sheet, on balance sheet, and you can see really the total assets of Fannie Mae quarter on quarter haven't really decreased very much at all. On the next slide, if you break that down by national commercial banks, you can see here we've got $10 trillion in assets, which is made up of the commercial banks. And that's, if you drill down again, we can look at that. What are the individual companies that make that up? And you can see here that's the four big banks, Bank of America, Citi, JP Morgan, Wells Fargo. And these four banks alone represent $7.7 trillion in assets, and the aggregate of all public companies is $49 trillion. So they represent a massive sector of the economy, and this is why you have banks that are too big to fail. If these banks did fail, the economy, it would be in ruins.
What are other countries doing about automating their corporate data?
So we have, the US has really taken the lead on this, but a number of other countries have also been watching the US very closely. In Japan, for example, they actually started with XBRL before the US, and they required companies just to report the face of their financial statements. And this year they've also started requiring companies to also report the detailed footnote information in an XBRL format. And this also has the advantage that XBRL supports many languages, so even though this financial information may be in Japanese, it also can be converted to English instantaneously.
Is there any consistency between what a Japanese company would file as revenues or assets and what a U.S. company would file as revenues or assets?
Yeah, XBRL is based on the underlying accounting standards that exist in those countries. So in the U.S., they use U.S. GAAP. In Japan, they have Japanese GAAP, which is used. If someone wants to compare the results between those two jurisdictions, they're going to have to look at, what are the equivalents. They're going to have to do some kind of mapping between it. But because this information is all standardized, that doesn't have to be done by every individual investor, which would have to happen if it was being done in paper. So we expect, or we're seeing companies who are starting to do this mapping and start to provide that as a service, so small investors can subscribe to that. And that can be very much mass market because this data is standardized. There are three main accounting standards which have taxonomies for them. Obviously, IFRS has an XBRL taxonomy.
Let's unpack those initials. What does that mean, IFRS?
IFRS is the International Accounting Standards. The US obviously has what you heard to as US GAAP or US accounting standards. They have been predominantly used obviously in the US and have been used in other countries around the world. The International Accounting Standards is now being more broadly adopted. It's based in London, so all of Europe's using IFRS, Australia, New Zealand, Israel. So you have a bunch of countries China, who are all moving to the IFRS standard. And obviously in the US there's been talk from the SEC about adopting IFRS. A number of companies who file in the US can report an IFRS standard.
Investors are also concerned, and perhaps more so, about revenues. Let's talk about revenues a bit.
All right. Well, thanks, Howard. The revenues can also be broken down. We brought a graph along here too, and you can see revenues for the aggregate economy as well. And here you can see that manufacturing makes up the bulk of the revenues in the U.S. There's at the end of 2012 there are approximately $15.6 trillion in revenues for companies who are public reporters, and of that, $6 trillion of revenue has been generated from the manufacturing sector. And we can see here, if we drill down into the manufacturing, the biggest sectors are oil, auto, and pharmaceutical. Those three sectors, they contribute. Oil, 1.3 trillion in revenues. Auto is 600 billion, and we've got the pharmaceuticals is 347 billion. So they may not be the traditional manufacturing sectors that most people think of as the biggest. You always hear auto as, hey, that's the biggest provider of manufacturing jobs, but something like oil and gas is a massive part of the U.S. economy. And when you start to look at this information, you start to get a much better idea of what the economics are that drive a lot of decisions that are made both by companies but also by government and affecting politics.
What about net income?
Yeah, so because this is a dictionary, we basically pretty much any information the company's going to report is available, and net income is another one which is probably a lot more important to folks in terms of looking at the returns. And we brought that information along here. Here you can see the revenue by sector, and you can also, this is from the manufacturing sector, you can see here pharmaceuticals. Obviously are a lot more profitable than oil and gas, have a better margin. But down the bottom too, you can see electrical component manufacturers. On here you can see Apple, obviously, which has a significant impact, and obviously Exxon and Apple have nearly equivalent revenues. And so you can see this data pretty quickly and pretty easily in a graphical format. So it just makes it a lot easier to be able to consume. And around the circle there, you can see other companies which everyone would have heard of, just because of the massive amounts of net income that they do have.
Who has the cash?
Who has the cash? Well, this is kind of interesting. We hear about companies building up big cash reserves at the moment. So with this data, you can see this information pretty clearly. You can see obviously here pharmaceutical companies having a lot of cash on hand. Obviously, with their pipelines, they want they obviously want the cash to be able to buy new startups which have new drug opportunities and potential buffer against lawsuits as well. ExxonMobil and the oil and gas industry obviously has a lot of cash just because of the amount of the revenue they're generating. And you can see on the bottom there, Apple and the auto industry seems to be quite well capitalized now after obviously a lot of the reform that's gone on in the last few years. One of the things that obviously is interesting is, where is this cash? There was an article in the Wall Street Journal a few weeks ago about unremitted foreign tax earnings, and a lot of these companies are earning the cash offshore and finding it difficult to necessarily bring back and pay to return that to investors. So we also pulled the data.
And we'll not only return it to investors, but to invest it in jobs in the United States.
Correct.
Yeah.
So, and one of the issues with obviously bringing this money back to the US is the taxes that are paid on dividends from foreign subsidiaries, returning that money to the parent. So if you look here, we printed out just another. You can look at, if you look on the graph here, you can see the unremitted foreign tax earnings. You can see the pharmaceutical industry has a lot, just because of the nature of their business. They're probably one of the biggest export earners for the US. And if you look at this, and the unremitted foreign tax earnings mirrors a lot of the cash that's held by these companies, just with the associated problems with returning that money to investors.
Tell us what the database says about R&D.
Yeah, so if you look here, you can see we thought it might be interesting just to give your viewers just a view on what that is, and once again you can see there's about $230 billion in R&D was spent in 2012. The vast majority of that was spent in pharmaceutical research. This is, as you know, this is an area where you'd expect a lot of R&D, and there's also a lot. Also, obviously, you can see it pretty clearly here in semiconductors as well, and the auto industry is doing a lot in R&D. So these are usually higher paying jobs. These are the kind of things that we want to keep here. You can see from the previous slide with the unremitted foreign tax earnings, a lot of that revenue is being generated offshore, and it's in companies' interests. The way the tax law is shaped is to push those jobs offshore so they can get a lower tax bill. So it kind of gives this information gives you a very good insight into some of the way that companies are making decisions and the way that they're going to structure their businesses, so that they can maximize their returns. And this is information not only useful to investors but also to policymakers as well. And they need to take these things into account if they really want to, if their objective is to return jobs to the US.